Welcome to the D-Shift podcast, where we provide inspiration, motivation, and education to help you transition from the challenges of divorce to discover the freedom and ability to live life on your own terms. Are you ready? Let's get this shift started. Hello, and welcome to another episode of the D-Shift podcast. And today we are going to be talking about kind of finance, real estate, dealing or opportunities, I'm going to say, that may be something that if you are a person who has gone through a gray divorce, or you're a person that's been divorced for a while, or even if you're not divorced and you're a couple still, or just a new couple, you may want to consider, and that is a reverse mortgage. And I have Laura Phillips is going to be here on the show with us today, and she is a licensed reverse mortgage specialist. And I'm so happy to have her on the show because we have had people kind of allude to the idea of a reverse mortgage, but I think getting it from somebody who is a licensed specialist in the area is really important. Laura is on a mission to guide people through this reverse loan process as smoothly, easily, and stress-free as possible. And I think anything that's kind of a newish thing on the market is always a little concerning for people. And a lot of people are kind of pushing back about the idea of reverse mortgage, which I think is not doing them very much of a service. It's closing a potential opportunity. So, Laura, welcome.
Thank you so much. I am so happy to be here. Fire away.
Yeah. Okay.
Well,
I was going to say the first question I always like to ask people, because I think whenever we're listening, we want to know who it is that's talking to us. So tell us a little bit about your journey to get to be a licensed reverse mortgage specialist and why this is your area of passion.
Well, I have been a mortgage lender for over 30 years. So I have a long history. My daughter was born during the beginning of the first market collapse back in 87. So I've loved doing mortgages my whole life. And the reverse mortgage has been out since the Reagan era. And I was kind of watching it, always observing it off to the side. And I had one of my first calls back in the early days from a gentleman who wanted to get a reverse mortgage to take his wife on a dream trip. She had been diagnosed with a terminal disease, and he wanted to offer her this gift. And I hadn't done one before. I didn't know much about it. So that was my deep dive in. Let's learn about it. And it was such an emotional connection with him to help this happen. And I went, wow, this is amazing. And then I went on from there to discover that there were a lot of negative thoughts about reverse mortgages. So about 7 years ago, I decided to plant my flag in the reverse mortgage market. I'm licensed to do any kind of mortgage loan on a house, but this is the one I want to specialize in. I feel it's underserved and horribly misunderstood. And if nothing else, I'd like to get good information out about what a reverse mortgage is.
Yeah, and that is, first of all, thank you for doing that, because there is so many opinions about this. And quite often, you know that saying about opinions, I'm not going to say it because it's not very pleasant. But the thing is there are so many, so much misinformation. There's so many blogs that talk about, oh, this is just, a big scam and all that kind of stuff. So let's dissect those myths and let's get them out of the way. But let's start with talking about, if you wouldn't mind, what is a reverse mortgage? Just so we know we're all talking about the same thing here.
Absolutely, absolutely. Well, it's designed for people over 62 and up. It is a HUD product, so that's a government product, and it's under the FHA banner. So it is a government-regulated loan, and it is a loan. It's not something that gives your house away. It's literally a loan on the house. It's just very, very different. So what happened was when President Reagan started out, he started this product out. Gosh, when was he a president? A while ago. I was alive then, so I should probably write that date down. But he came out with it in the beginning, and it was designed to help a senior woman who had lost her husband stay in the home so that she could continue to raise her 5 children. From there, it became a full product, and with a lot of not thought into it. So some of the myths out there is that the government that takes your house away, it owns your house. And that's not true. The government doesn't own the house. You still are entitled. You're still 100% owner of that home. The government has a lien. FHA has a lien against the house. That's no different than any of the other liens you've had on your home. It's just how the lien is treated. One of the other big things that I think was really a lot of negative press in the early days was that they only looked at the one spouse, putting this one spouse on the loan. Typically, it was the male. Think of the era and the time. Typically, it was the male. So the wife or the other spouse did not get on the loan. And when the first person died, the only one on the loan, the spouse, usually the wife, was literally on the street. So now we had widows on the street. And that's very bad press, by the way.
Yeah.
You just
Yeah.
don't want that. And so, between those two things, that the government's going to take the house away from you, or I'm going to lose my house, or my spouse isn't going to be able to live in it, are probably the biggest two things I hear people tell me every time they meet me. And they say, oh, that was a bad thing. So
Yeah.
lost the house. Yeah.
Yeah. So first of all, I did not know that this went back to Reagan's days, because I thought it was a relatively new product. So like within the last at least 10 years, because I really just started hearing about them in the last, we were talking about this before we got on the air. Really, that whole, when Tom Selleck was on all the commercials trying to sell it. And I said, I had told Laura when we were talking that a friend of mine had said, well, it can't be all that bad if Magnum PI is selling it. I remember her saying that to me. But so I like I said, this is kind of, I'm kind of surprised. It's throwing me a little off my game because I didn't do any research on this before we got on the call. So I think that is reassuring to know, number one, it's a government product. So, you're not at the same risk of just like some lender going bankrupt or something, because it's a U.S. government backed program. And also that that there's no transfer of ownership of the home. I think that's the other one that's I think a big concern for a lot of people.
It's a huge concern. And like I said, they're always somebody from the church, my friend, a friend of a friend. I mean, the stories are out there, and really there are a lot of myths. There are more, but those are the two big ones, to be very honest with you. So how does a reverse mortgage work? Because that's probably the next question.
That was exactly what was coming out of my mouth.
Great segue. So a reverse mortgage, what happens is, in a regular mortgage, we'll talk about that first. In a regular mortgage, you wrote a check or did a deposit to your mortgage company every month to pay to own the home. And so you could say, congratulations, I own the doorknob this month. You were sending checks in every month. Well, the idea behind the reverse mortgage was to take seniors and allow them to live comfortably in their homes for as long as they were able to live in their home. So instead of making a payment on the house, the lender sends money to you in the form of an annuity. That's one of the ways you can get cash back out, or you can get a lump sum. So it's a vehicle, it's a lending vehicle that allows you, the senior, to be able to tap into the wall of the house and get some of your equity out. Most seniors are on reduced incomes because we're not working as much to have more income come in. And so it's hard to qualify for a loan. So it's very, very difficult to get a loan and get your equity out. And this is a way that allows you to get your equity out and does not require you to make a mortgage payment. So it's the only loan I know of in the world that does not require a loan payment. And you can if you want to, but it's not needed.
That sounds really interesting. So I'm going to ask a question, and if this isn't comfortable to answer, just don't answer it. But what's the difference between like a HELOC and a home equity line of credit or a reverse mortgage? What's the difference or the pros and cons to those?
Absolutely. And that's an excellent question, because I get that all the time also. So a HELOC, a home equity line of credit, can be offered through a mortgage company, but traditionally comes from your banks or your savings and loans. And it's a second line of credit on the house, and usually has a term of interest only for, 10 years or so, plus or minus on that. And the next 20 years, total term of 30, you start paying it back. the balance that's owed back. So during that 10 years, you can take it out, put it back in, whatever. It's the money's yours to use. So a home equity, HELOC, they should really change the two initials, by the way, because even I get confused. So a reverse mortgage, or a HECM, HECM, which stands for Home Equity Conversion Mortgage, it does the same thing. Again, it again can give you the money that you're tapping out of the house to you, either in a line of credit or as an annuity being paid monthly, or a combination, whatever works in your life. But you don't have to make those payments back. And there's a sweet spot to that line of credit. If you don't use all of it, next year it grows in the balance so that you have a little bit more every year. And it grows at the interest rate that you have against the loan on the lien on the house. So they work as two separate pots, but they both use relatively the same interest rate. So that line of credit can grow nicely if you don't need to use it right away.
Oh, okay, great. So it's really an alternative option to a HELOC, because I know HELOCs aren't always user friendly, and people can get really tripped up in that not needing to pay, and then all of a sudden it's like, oh my gosh, like there's a lot to pay back quickly. So
Absolutely.
Now, how does so you said that the reverse mortgage could come in the form of an annuity? Is that what I heard you say?
A monthly payment, similar to like what we get from Social Security. I mean, Social Security is a form of an annuity. It gives you X amount. So it's the same type of situation. It can give you a monthly income if you feel like you need a little bit of extra income coming in to feel more comfortable about situations in your life. Or it could be a combination of that and a lump, a line of credit that just sits there. Or you can take a line of credit and just use all of it, well, or most of it. You don't get to use it all the first year. But those are little guidelines to just kind of make it safe for you as a senior. The government came in and looked at why there were so many foreclosures. They didn't like that. They don't want to own your home. They're not interested in being real estate people. They're interested in being money lenders, the people that lend the money. So they just said, what's going on? And what they realized in the early days was, if you gave somebody $300,000, that maybe not the best decisions were always made at getting that lump sum. And so this way, as it stands right now, and these changes came out, I don't actually know the year those came out. Those changes came out saying that you could have 60% of what you were totally allowed the first year, and the second year you would get all of it. So it was just a way of kind of helping the person it's like winning the lottery, getting a lot of money in at one time,
right,
using it smartly.
Right. So now, does that impact like for tax purposes? Do you have to pay taxes on that money that you're getting as that monthly payment from the reverse loan?
Well, I'm not a tax person, so I'm going to.
Right.
I'll stay in my lane.
This is absolutely not. Nobody's providing any, I should have said this up front. Nobody's providing any financial information, advice. There's no client professional relationship formed here. And please do your own research before making any financial decisions. I should have said that right up front. Thanks for reminding me.
Thanks for that disclosure. I appreciate it. What I know is, if you get a home equity line of credit, the second from the bank, I believe it is not taxed.
Right.
So you could confirm that with your tax associate.
Yes.
Absolutely. So the same with the reverse mortgage. Now, is there a tax on it? Absolutely. At the time of the sale, the house is going to have a value, and the mortgage loan is going to have increased because you're not paying. So that interest has got to go somewhere. Builds up behind each month. It gets a little bit bigger.
Sure.
That piece is taxed. So the sale of the home, the paying off of what's left on it, and that piece is a taxable situation.
Sure, as it would be if you sold any piece of property. Yeah, absolutely. So that was going to be my next question: is if you have, let's say, if you pass away, if you are the person that owns has the reverse mortgage, and it's being paid, if I've got it, it's being paid to me, and I pass away, right. What happens at that point? Let's say I left the home to somebody else, or my dogs, or whoever. What happens at that point?
Well, it's still in your estate. Remember, you're entitled. You're in ownership of it. So it just goes into your estate. So there's two things that can happen. If the house has value in it still, and the mortgage loan is less than the value of the home, then your estate, your heirs, whoever you've left it to, can do one of two things. They can sell it and recoup the difference in money, or they can purchase it if they want that home. And it's a complicated system, and it's actually done more in the servicing side than on the getting the loan side.
Sure.
But I understand it to be about 95% of the loan amount. So you could leave that to heirs, and they could have an opportunity to purchase it if they wanted to. They would have to go out and get their own loan to do that, but it is a possibility.
Right. Wow. So this doesn't really sound like there's a whole lot of downsides to this.
Everybody that ever talked to me says that. So yes, I think there is. I look at it this way. It's a planning process. I'm not a financial planner, but I really work very hard. And there's no category for us, the loan officer. What does that mean? I sell loans, but I do more than that. And I've always done that. Well, I'm going to look at your finances. I'm going to ask you, have you thought about what long-term health care is? Are you planning on staying in the house? Do you want to give the house to the children? All of these are questions that hopefully any reverse mortgage lender would talk to you about. In that process, I would look at and say, okay, well, here are the options if you want to take the maximum amount out and you don't have any heirs. But if you want to leave the house to the kids or the grandkids, we should look at these products. They're not going to allow you to have as much. So again, I'm not a financial planner, but I have that scope of looking at your funds that way.
Right, right. Yeah. And I think this is important because there is a growing need, or a growing desire, maybe is even better, for seniors to, what do they call it, age in their home or age in place, whatever the term is. That, there's a lot of mental health benefits to that. There are some concerns about kind of warehousing seniors in large facilities, there's a detriment to that. As I'm starting to push my age up there, I'm thinking, I don't want to be living with a bunch of old farts. I want to be in my own home, being able to do my own thing. And I think that's really important for people. Yeah.
Well, you can use that money with a reverse mortgage that you do. I mean, none of our houses are really designed. I mean, I live in a tri-level. I'll just use my own example. I live in a tri-level. My brother-in-law lives with us, and he has Parkinson's. So, of course, stairs are not the world's greatest thing for somebody with Parkinson's. And at some point, we either have to modify the house to accommodate the stairs for him, or go buy a ranch somewhere. Right? I mean, that's really the realities. So if you're living in a house, and it can pretty much work with you if you do the modifications, you can use that reverse mortgage to do the modifications. You can also use the reverse mortgage to bring in care if you want to bring in people to help care for you.
Sure.
Several loans I've done that way, where he wanted to age out. He was 92 years old, but he wanted to age out, and he had already used up pretty much all of his assets that he had. And I worked with him and his son to make sure that we could get a reverse mortgage that worked for him. He didn't expect to live to be 150. So we were looking at trying to maximize to be able to pay for the care that was there.
Right. Yeah. And so now I just want to make sure that I'm understanding this. You have to be a senior. And what's the senior definition for the purposes of a reverse mortgage? Like, what's the magic number?
The magic number is 62 for the government loan and 55 for people who own homes that are over $1 million. So I have what we call a jumbo, or a proprietary loan for those higher priced homes. There is a product out there for them also, and that's 55. You take a class. It's not like it's kind of a pass and fail, but I'm not going to get scared of, because I'm going to provide you with a book that's going to help you answer every question that they could throw at you, and also is going to help you feel much more comfortable about working with a reverse mortgage. So you take the class, we get done with it, we start the loan process, we get an appraisal, we're done in 6 weeks.
Wow.
Start to finish.
Wow.
Pretty quick.
And Laura, can I just, because I'm trying to, this is, like I said, you're such an expert. I want to make sure I ask every question I have about this, or every question I've ever had asked to me about it. Do you, which I don't know, I just tell people I don't know anything. Let me Now I've got Laura. Now I'm going to say, hey, here's Laura's information. Go talk to her. What you can only take out this reverse mortgage on the equity in the home or on the value of the home.
Well, the equity is kind of the value of the home less loan. So if the house is free and clear, then you have all the equity to you. When President Trump was in his first office term, he lowered how much we were allowed to take out. So we went from 75% to 60%. So if you're in your 90s, you can tap about 60-ish% of the value of your home, less any payments that are due. So first or second, any of those things. Somebody at 70 can probably get about 45% of their value of their home. So it is tapped to that, and it's designed so that the house will ultimately try not to go upside down. In other words, the loan balance is going to be too high. Now, I should say, as a disclaimer on my end, that if you are 70-ish and you take out a reverse mortgage and you live until your mid-90s, your house might be upside down. It's just nature of even the appreciation of the home versus the loan going up. Those are some precautions, and I try to talk to, I make sure everyone is talked to about that situation.
Right, right. And I just but I really think that this is such an important consideration, because I forget who was telling me this, but women who are widowed or divorced and over 60 are the highest group that are likely to live in poverty. So if you're in a home, if you have equity, we were saying this before as well, that you're house rich and cash poor. This is a potential option to consider, where you get to keep ownership in title. You keep the title of the home. You live in it, and you get paid to live in it.
Absolutely, and you get paid to live it. As I had said when we were talking earlier, it's the only loan I know that you don't have to make payments on, and if you don't want to, and it allows you to live comfortably. It was designed for that. I guess the other big thing to know is that it's not just the United States that has this. It's in almost every country out there that has, first world situations. I always think those are funny. First world, third world, what does that mean anyway? But I mean, Japan has one, Australia has one, Canada, England. I can just go on and on about countries that have some form of a reverse mortgage that allows their seniors to take their equity and live comfortably in their homes on their terms.
Yeah. And it's like any kind of loan. And I really appreciate you said that. Once you get the money every month, it's yours to spend. You can do what you want. You can travel the world if you wanted to.
First example, absolutely.
Now, here's one question that I'm sure you get asked. Is this only on your residence, or if you had, say, rental properties or anything else?
Great question, and I should have probably brought that earlier myself. It is only for primary residence.
Okay.
So it has to be your home. And one of the things that they're going to ask you, the lender, the servicing department of the lender's department, is going to ask every year is, are you still occupying the home? The guidelines and rules behind the loan say that you have to have it as a primary home. Now, you can go to Europe or Africa or wherever you want to go for 9, 10, 11 months, but it still needs to be your primary home. I have people that put reverse mortgages on their primary home, but have secondary homes. We live in Colorado. It gets snowy. Nobody wants to deal with it. They go to Arizona for the winter.
Sure.
They are snowbirds. So that's fine. We don't care. The lender doesn't care.
But they have to pick either the Arizona home or the Colorado home. They can't have it.
They have to pick one to say which is their primary home, and that's the one that they're going to put it on. Absolutely.
Yeah. That's wonder. And what if you had, say, because I know a lot of people I know that are single are doing this now. Let's say they rent out their basement. If you are renting a room, or your home, part of your home is an Airbnb, like, does any of that knock you out of contention for a reverse mortgage?
That's kind of still a gray area. I have had loans do that, and it really is going to depend more on your local government rules and regulations behind it. I've had some homes that had ADU units where they had actually built a little unit on there. That seemed to be, the lender seemed to understand that a little bit more, just because it was a separate building, but it was 2 buildings in the appraisal, so they got that. I think They all allow renter income. So I guess in essence, the answer is yes. But again, I would go back to what are your county's guidelines behind having it?
Right.
Some counties are saying no more,
Right.
no more. And so we wouldn't want to hide anything.
Yes.
That's considered a fraudulent situation that I don't want to put you or myself in. So you being, the listener at this point, we should never look at that. We always need to be upfront about all of our situations.
Yeah, and so that makes sense. On the application, I'm sure that there's some blocks you have to check saying that you don't have, either it is an approved rental unit or there's no, it's not on the property. So
surprisingly, we haven't put that on yet, but give them another year, they'll figure it out.
I'm sure
you would say, I have rental income. And of course, then we go, okay, where does that come from? And you'd say, well, I have a long-term renter. I live in a bi-level. I live upstairs. They live downstairs. I rent out a room. Great. Do you have an agreement, a lease? What do you?
Right.
So all of those things would come up, and we would need to disclose that. It would be in your best interest to disclose.
You have to disclose these things. You in today's world of technology and everything at everybody's fingertips digitally, like in a second, you do not want to be trying to do anything that's not completely 100% above board. So, Laura, I have learned so much. I mean, thank you for sharing all this expertise and a real practical and wise way of looking at a potential source of income for seniors like me who may be a little bit stressed for cash at the end of the month. This is an opportunity to turn that equity in your home into actual value for you to be able to live and do things that you want to do. So, Laura, you've covered a ton of information. What do you think is the one takeaway you'd like people to keep in mind?
Well, I think you should always reach out to a professional if you're going to go look for a reverse mortgage. I mean, any lender in theory can do a reverse mortgage, but I would highly recommend asking a few questions like, how many have you done? Or, and they may kind of hem and haw, and that's okay. There are reverse mortgage specialists out there like me that are happy to work with you. And I know that with asking a couple of questions, you'll find us.
Wonderful. So that leads me to the next question. How can people find you if they're interested?
Fair enough. Well, I have a website. It is my name, Laura, Laura. Phillips has 2 L's, so it's PHILLIPS.com. And you can reach out to me there. I am happy to schedule a call with you. 30 minutes. We can talk about your basic problems and information you might want to know. And then just kind of go down the rabbit hole, the path, very gently, almost like a cup of coffee. We would share a cup of coffee or tea together and find out what's going on. Will it work for you or not?
Wonderful. And thank you for that generous offer, Laura. So if you are interested, if you've been through the divorce, if you're widowed, or even if you're a couple and you are thinking, wow, we could use a little extra income here, definitely reach out and call Laura. Laura, thank you so much for being here. Like I said, I've learned a ton and I feel so much more confident now telling clients, I know an expert. Let me hook you up with Laura. She can talk to you about this. So thanks for sharing all your wisdom.
Thanks, Maya. Thanks for having me on board. I really enjoyed it. And the best to everyone.
Yeah, and it's been great having you. And thank you all for listening into this episode of the D-Shift podcast. And don't forget to tune in again next week. Thanks for listening and supporting the D-Shift podcast. If you would like to attend live trainings by our amazing guests and have a chance to ask questions and get answers from our experts, join the D-Shift crew. For more details and to sign up, head on over to www.divorcecoachforwomen and click on the podcast page.